Morning, nearly 8:30 in the UK, although I am actually in Thailand still, where it's nearly 3:30 in the afternoon. Thought I'd have a look at some crypto. Haven't had a look for a while. Had some developments in the last couple of weeks, as you can see from this weekly chart. Significant move to the downside. The bounce didn't go too far. Did hold our resistance levels quite nicely, actually. Now, the question is this a head and shoulders pattern that we're seeing here? Let me just try and draw that out for you just so you can fully visualize it. That could be what I'm looking at for the left shoulder. That could be what I'm looking at for the head. And this is what I could be looking at for the right shoulder. There's the neckline, as you can see, which I've drawn in. Now we've broken it, and we're certainly staying below it, as you can see. Not only are we staying below that, let me take that off, but we're staying below the 38.2% fib, which is important at 44,100, isn't it? Pretty much bang on there. So the 44,000, 44,500, which I've had as a resistance level on my reports, working perfectly. We're dipping down. So this continues to be quite a negative picture. And if that is a head and shoulders pattern, and if we have broken the neckline, then we could really be looking at another 25,000 points to the downside. It's really quite significant. Now, whether that happens or not, whether it fulfills its target, I don't know. But certainly the outlook is quite negative. Let's have a look at the daily chart, see if we're seeing anything. Nice bounce off the 500-day moving average. So that's what bulls will have to pray continues to hold. You can see that we are in a bear trend, and we have been throughout sort of most of November or December, and getting into January. Some negative moving average crossovers there as the 50 crosses already over the 100 and now the 200. So yeah, everything hinges on the 500-day moving average. So if you're a bull, if you think that this is just a correction, then you're piling in at around the 500-day moving average. That's what I would suggest. If you're a bear, then obviously you need that to break, because there isn't a lot of support. If that 39,000 breaks, I don't see a huge amount of support. I see some targets, but I don't see anywhere that I would particularly be looking to buy Bitcoin on the way down. Not at the moment, not for a long way. Ripple is already very clearly in quite a negative trend. We don't have that second peak higher than the all-time high, so much more negative tone to Ripple. And when we look at the daily chart, well, that certainly doesn't look particularly positive to me. But again, being saved by the green 500-day moving average. So the question is, will that now? Is that the floor? Is that it? Are we ready for another rally? We'd have to break up through this trend line, which is around 84.5, should we say? 84.5, 85.5. That's the key resistance. I would be more positive if we broke above that. We start moving down below the 500-day moving average, which is currently around 73.5. That's going to get quite messy. We've got a little trend line down here at 68, around 68.00. Break of that, that's going to look very messy indeed for the bulls. I can't really make a lot of sense of this, but I do feel that there is some pressure to the downside in Ripple, but there's no clear patterns or trends to follow at the moment. Well, a short-term negative trend for sure. Ether is looking also quite negative, and that's always been one of the stronger of the three, but clearly has broken some support levels, clearly broken the moving averages. Now the 200-day moving average is acting as a very good resistance level. We've got something similar on the 4-hour chart as a resistance level. So yeah, again, not feeling particularly bullish. We've got a long way to go before we test the 500-day moving average, because this has been a better performer. But when you look at that, you have to wonder, right, we've broken here we go. We have broken the 38.2% fib, which is around 3. No, we haven't. I'm lying. We did break it and we've recovered. So that's actually not too bad either. The fact that we bounced off that and this 61.8, so that's all good as long as we hold above 3,000. Now, the only problem for bulls is that in the short term, and I'm probably just going to use the daily chart for this anyway, we do have some fib resistance. There we go. Take that there. Around 33.5, which we've not been able to pierce. And obviously we've also got the 200-day moving average, which is around 34.5. So that 33.5, 34.5 is the resistance level for the weekend. And obviously we have already rejected it. So that's not good news for bulls. We will definitely need to get up through there over the weekend if there's to stand any chance of us moving up to the next level, which is sort of around 36.5, 37.5. That would be the next target. But look, a lot of resistance there. That really did hold on the downside for a long period of time, well, the whole month of December. And then once that broke at the beginning of December, we plummeted. So that really will be a strong resistance level again. So there is quite a lot of pressure to the downside for these crypto markets at this stage. Okay, good luck with it if you're trading crypto, and we'll catch up again next week.